Hello, my name is Steve Bigelow with the Candlestick Forum. We're still seeing kind of a summer doldrum type market. We know that the drift has been down or a downward direction over the last few months. And right now, in this downward direction, today, even though the Dow is up a little bit, we're up in the overbought condition. And we're still in this downtrend. It hasn't kind of broken out. It definitely needs to break out through this level. Would not be unusual to see it come back and either test the T-line or the 50. Or if it didn't hold there, this downtrend remains in progress. So the NASDAQ, same criteria. It's been in a slow downtrend. It did try to base. However, there is one very critical point that you can utilize when using candlestick charts, that if you see in the overbought condition that they can close back below the previous day's open, that tells you the bears have taken control. Doesn't necessarily mean there's a full-scale reversal. Just tells you to start watching for selling. Notice how the the NASDAQ came right back down to the T-line today and used that as support. It'll be important to see how the markets move tomorrow. But it's going to be influenced by the fact that the retailers are going to be selling off. As you can see, Amazon being kind of the a bellwether chart, had a bearish engulfing signal right at the same level it topped out before, and now trading down after hours after Walmart came out and said that they were going to have a hard time getting rid of their inventory, and that they were projecting lower revenue or margin. So everything in the retail area is selling off. So stocks like Gap that have come back up to the overbought area could probably be coming back down to the low end of this range. So these are some good shorts that could be put on weakness tomorrow. The other sectors that are acting, the other sector that is acting strong is the energy sector. A lot of the oil stocks, CEIX, look where it's doing a J-hook pattern. Remember what we know about a J-hook pattern, that wave 3 is usually the same magnitude as wave 1. If that's the case, the fact that they broke out through this level tells us there's probably going to be a lot more upside. We're seeing that in a lot of the energy stocks, the oil stocks, Apache, Occidental, ExxonMobil. They all have good bullish charts right now. And the lithium mining companies, our recommendation on PLL was based upon the series of dojis, and then kind of your trend kicker that you're still trading above the T-line. You can stay long on this until you see a sell signal. So even though the market is drifting without any major direction, you've still got stocks that you could be buying. TH is one of our recommendations because of the J-hook pattern setup. This is why knowing what human nature does time after time allows you to utilize the patterns that are going to have high probability results. Same scenario on the downside. Our bearish best friend, a bearish signal in BABA right at the 200-day moving average, followed by a gap down. That's your best friend that shows a lot of strength coming into this downtrend. Now we can analyze what it's doing down here at the 50. Notice you have a bearish J-hook pattern. If you've been short, you stay short because it hasn't been able to close above the T-line. Or if you haven't been short, you still have a strong calculation factor that if this opens lower tomorrow, giving you a bearish doji sandwich, putting you into wave 3, which is going to be about the same magnitude as wave 1, you could pretty much now formulate what strategy, whether you're going to short the stock or buy puts or buy put spreads. So there's still lots of good opportunities, even though we're in the summer doldrums. There's still strong bullish signals, there's still strong bearish signals. They may not be as plentiful when you're in a bearish or in a sideways lethargic market, but the benefit of candlestick analysis is simple scanning techniques allow you to find the best trades. That'll be it. We'll see you in the chat rooms.